Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a new data scandal brewing at Facebook after the company revealed it shared user data with 4 Chinese companies, including Huawei and Lenovo. We will discuss the implications of this disclosure and get reaction in Washington with Congressman Greg Walden of Oregon. Plus, Tesla CEO Elon Musk gave a reasonably upbeat assessment for Model 3 production at the annual shareholder meeting, and investors rejected proposals to split Musk's roles and reshuffle the board. Is it a turning point for Tesla? And Alphabet shareholders voted down a staff proposal to tie executive pay to progress on workplace diversity at its annual meeting amidst rare criticism from employees. Will it backfire? First, to our top story. Another day, another round of outrage at Facebook's handling of user data. Only this time, it's not about a consulting firm with ties to President Trump or a company like Apple. This time, it's 4 Chinese consumer device makers. The companies in question are Huawei, Lenovo, Oppo, and TCL. Huawei was one of a few Chinese companies barred from having its products sold to the Pentagon and armed forces, and is part of an FCC ban on federal funds being spent on the company. So once again, Facebook is in a familiar spotlight, having to answer concerns that it's failing to be transparent in how its user data is handled by third parties. Joining us now to discuss, Sarah Fryer, who covers Facebook for Bloomberg. So the contention here is that Facebook shared user data and data on their friends with device makers, and 4 of them are Chinese companies, which the United States has talked about being possible security risks. How much fuel does this add to the fire?
It adds a lot of fuel to the fire, but I want to be clear that Huawei and Facebook have both said that no data was ever stored on Huawei servers. The thing that's the problem with that statement is we don't trust Facebook anymore. After all the revelations and apologies of the last few years, lawmakers are not really taking that as a clear response to this concern. They want to know why Zuckerberg didn't mention this when he had 10 hours of congressional testimony and he was talking about third-party relationships. Why not bring up these relationships too? And so there are a lot of angry people on the Hill today about Facebook.
Senator Mark Warner saying we need answers from Facebook, the whole story now, not 6 months from now. Senator Marco Rubio, why didn't Facebook just reveal this data sharing deal with Huawei months ago? And don't compare this to deals with other telecoms. South Korean government doesn't control or use Samsung the way China controls or uses Huawei. What do we know about the nature of this data?
So this data, basically what Facebook was allowing these device makers to do is build Facebook app experiences into their phones. These are kind of legacy partnerships from before the App Store even existed on these phones. And some people are still using these devices that have these old versions of Facebook apps. So they haven't unwound these partnerships. Facebook said in April that it was planning to. Remember, they did this big review of all their different relationships to try to find potential privacy holes. And they themselves noted that this was one potential harmful relationship that they should end. So they said that in April. The blog post, unfortunately, was full of jargon that was difficult for a regular user to understand, that this is your information flowing through a device in a way that you didn't necessarily expect.
I want to go back to that memo that Facebook executive Andrew Bosworth sent to the company, where he mentions China and talks about the lengths Facebook will go to achieve growth. In 2016, he says, that's why all the work we do in growth is justified. All the questionable contact importing practices, all the subtle language that helps people stay searchable by friends, all the work we do to bring more communication in, the work we will likely have to do in China someday, all of it. It certainly is not a good look.
It's a terrible look, but the Huawei phones are used all over the world, including in the United States, right? And so what Facebook is arguing is that they need to have their app on one of the most important phone manufacturers around the world. And so that's kind of the way that they're staging this, that other companies, including Google and Twitter, have their services on Huawei phones too. yet to be seen whether there's any harm that has come out of this deal that we have not seen yet in the reports.
Now, in the meantime, Facebook says it's going through a long auditing process, if you will. And take a listen to what Mark Zuckerberg had to say when he testified on the Hill.
It's going to take many months to do this full process.
Okay.
And it's going to be an expensive process with a lot of auditors, but we think that this is the right thing to do at this point.
All right.
Before we'd thought that when developers told us that they weren't going to sell data, that was a good representation. But one of the big lessons that we've learned here is that clearly we cannot just take developers' word for it. We need to go and enforce them.
Explain to us what Facebook is doing right now. And are we going to see more of this? Every week, every day, there's a new skeleton coming out of the closet.
That's the problem. It's this constant trickle, right? Like, we don't know what else is out there. The issue with this auditing process is that Facebook doesn't necessarily have visibility into where the data has gone once it ends up on a third-party server. They could sell it to a consulting firm. They could do whatever they want with it. And so these audits may not actually be super effective. Facebook did flag and suspend 200 different apps that it says may have been in violation of their rules, but they don't know yet. They're still looking into it. In this Huawei situation, what's different is Facebook said that it actually had people that were managing this relationship and trying to make sure that the way the app on their phones was built was not sending information back to Huawei servers. So in fact, this kind of stuff is much more closely monitored by the company because they don't want to.
But how do they know what's going back to Huawei servers or not?
They don't. They don't. But then, you have the U.S. government has warned about these phones. There are many other apps on these phones too. Are all of the? We get into hypotheticals here, right? Like, what's different about this and Cambridge Analytica is Cambridge Analytica, we know that information was transferred to a third party, that it was, from users who had not given their consent to have that transfer. What we know here is that Facebook had this deal that users were not explicitly aware of. That's a problem. Whether there was any harm in transfer of this data beyond users' expectations, we don't know that yet, and that's what we're hoping to find out.
Sarah Fryer, Bloomberg Tech. I'm sure you'll be back very soon. Thank you. All right, we're going to be coming back later this hour with this story with one of the congressmen who questioned Mark Zuckerberg on Capitol Hill back in April, Representative Greg Walden. We will be asking him for his thoughts on all of this. Well, Twitter is celebrating its entry into the S&P 500 by selling $1 billion in bonds. Twitter's second ever debt offering comes a day before it becomes part of the fabled index. The move continues to turn around for the social media microblogging site since last year's low. Shares have doubled since then as Twitter has boosted its appeal among users and advertisers and posted positive earnings in its most recent back-to-back quarters. Coming up, Elon Musk gave an upbeat outlook for Tesla at its annual shareholders meeting, but did investors buy it? We will discuss next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. Tesla shareholders sided with the company's board at its annual meeting, re-electing 3 directors criticized by an activist investor group. And CEO Elon Musk gave an optimistic outlook, saying he expects to hit the next production goal for its crucial Model 3 sedan by the end of this month.
Currently, the biggest constraint on output is General Assembly. And I think we can probably get to 5,000 a week with the current 2 General Assembly lines. But with the third one, I'm highly confident that we can exceed 5,000 units per week.
For more reaction to this meeting, we are joined by Tasha Keeney, analyst at ARK Investment, which holds Tesla stock, and Bloomberg Businessweek's Max Chafkin in New York. Max, I want to start with you. Talk about what stood out at this meeting in particular, given all the drama leading up to it.
So the clip that you just played, the 5,000 figure, that if they are able to hit that, that will be huge. And I think the stock opened the morning after the meeting really strongly, and I think that is what investors are reacting to. For the last few months, it's been all about just how many of these Model 3s can they get out the door, because the demand is there. It's just a question of is Tesla able to get through this quote unquote production hell?
I want to take a look here at a chart in my GTV library about cars produced every quarter. He says they can get to 5,000 cars a week, but production goals, as we know, have been pushed back and pushed back and pushed back. Do you believe him this time?
You know, I'm optimistic. I think Elon Musk is capable of amazing things. I mean, he's literally capable of rocket science. So I think even if he were to say that miss that goal by, say, a week or two, even a month, we're long-term investors at ARK Invest. We have very high confidence in Tesla. It's one of the top positions in a few of our funds. And we're really looking to the long term here. So it goes past the production numbers. We think this is an autonomous electric vehicle story. And that's the largest opportunity ahead of Tesla. We think it's a $10 trillion market globally, and we're excited that Musk has realized that opportunity, and it seems like he's on track to get there.
Meantime, Tesla is now turning its attention to expanding its manufacturing capacity, talking about opening another plant which will produce cars, battery packs, and power trains in Shanghai. Take a listen to Tesla's Robin Ren, who runs worldwide sales.
We're incredibly excited to build first Tesla Gigafactory outside of the U.S. In China. Specifically, it's going to be in Shanghai. And we have been holding discussions with the government, various governments in China. Really great discussions, great partners. We really look forward to working with them in the years to come.
Max, are there any concerns that Tesla is moving ahead too quickly with its global operations, given that it can't move fast enough here at home?
I mean, it kind of depends on your point of view. I think that when you talk about the sort of Tesla optimists, I think what they're looking at is this future story. And for the future story, that Tasha was talking about, for the future story, China is huge because China has this enormous market. Even today, I mean, people don't realize this, but many of the best-selling electric cars are being sold in China. The country also just changed the ownership rules for factories, allowing Tesla to open this factory without doing a joint venture. So there's a lot of opportunity there. So if you're taking that kind of long view, yes, absolutely, it's a great sign. I think there is there are these questions of sort of distraction, and the sort of threat to Tesla is if they're not able to make these cars quickly enough, you start to see other competing automakers with better and better offerings. Maybe some of these customers who put down huge reservations in huge numbers, they start to get skeptical, and so it's like sort of a death by 1,000 cuts thing. That said, I think if you're an investor in Tesla, if you're excited about this company, the China investment is a big deal.
Tasha, let's talk a little bit about cash burn. I mean, if you look at other automakers like Fiat Chrysler, GM, these companies have a lot of cash, which Tesla does not. How concerning is that?
So I'd even say with that comparison, we think of Tesla as a technology company. It was really built from the ground up as a software company, and that's where the competitive advantage lies. And other automakers are still catching up to get there. When we think about cash, we're looking to the future. So once Elon Musk is able to turn these vehicles autonomous, the business model changes, right? It's no longer a one-off sale of a vehicle. It's a recurring revenue model, because they will get revenues from the per mile rates of basically an Uber-like service. Those will have really good margins, better margins than the car business, and we think that that opportunity should be valued at trillions of dollars right now in the equity market. It's basically not accounted for at all. So we think, at that time, cash burn is not going to be a question in the future. So we're really looking ahead to the long term there.
Okay, but other tech companies like Alphabet have giant piles of cash, and they're also working on cars.
That's true. On the call, Elon Musk said he thinks that their competitive advantage in the end will really lie in the manufacturing expertise. And if you look at the autonomous vehicle space, that's where the expertise is. We think of Tesla as a startup, but actually compared to these technology companies that are competing for autonomous, they have much more scale. They have thousands of cars on the road, and they're actually collecting data. They have billions of miles of data compared to just millions of miles at Waymo, Google's Outfit, or even at Cruise. GM's operation. And they're the only automaker that can do that because they have this over-the-air update capability. And they have a direct link to the car that no other automaker has been able to accomplish so far.
Meantime, Max, shareholders voted to reappoint the directors who were in dispute and to not split up Musk's roles. Do you expect there will continue to be, a push from some shareholders to break up the power structure here?
Yeah, I mean, definitely. The thing is that I think if Elon Musk were somehow pushed out of Tesla, or if his role were reduced in some way, I mean, that would hurt the value of Tesla, because a lot of what you're hearing it from Tasha right now, a lot of what investors are doing is they're betting on this guy, and that he has enough energy to focus on rockets and rating news organizations and building cars and God knows what else. So I think that this idea that Tesla should have sort of more conventional corporate governance, while it makes sense on kind of a sort of broad level, philosophical level, I think for this company, in terms of where the investors are, where everybody who is sort of buying the company is, I mean, they're buying Elon Musk to some extent. So it's sort of hard to imagine him being kind of having his role reduced.
Digging tunnels, April Fool's jokes, the list goes on. Okay, Max Chafkin of Bloomberg Businessweek, Tasha Keeney with ARK Investment Management. Thank you both. Coming up, one of the biggest fintech startups in Europe explains why they accepted a tie-up with PayPal over launching an IPO. We're going to hear from the CEO of iZettle next. This is Bloomberg. The fintech scene in Europe keeps getting hotter. Dutch payment processing firm Adyen is planning an IPO, and it's valued at more than $8 billion. Meantime, PayPal purchased iZettle for $2.2 billion the evening before the Swedish fintech startup was set to price its shares in an IPO. For more, I want to get to Bloomberg's Caroline Hyde in London. Caroline, take it away.
Yeah, Emily, it was such a last-minute deal and quite the letdown for all those hoping to see another Swedish tech firm going public after, of course, Spotify's listing earlier this year. I got to speak with its CEO, iZettle's co-founder, Jacob de Geer, about the sudden decision to sell and, well, why PayPal is a good place to grow in this competitive landscape. Take a listen.
We spent almost a year preparing for the IPO, and that was clearly where we were heading. So, effectively, just very close to the listing date, PayPal started or initiated discussions with the company, and it pretty quickly became, was very clear for us that we shared sort of the same kind of vision when it comes to addressing the needs of the small businesses of the world. And looking at the size of iZettle prior to the IPO, we have somewhere in the area of 500,000 merchants using our services across our 12 different markets. And PayPal has in the area of 20 million small businesses that can leverage from what we have built over the last couple of years, effectively sort of a commerce platform for small businesses to start, run and grow their business. So with that, I think we came to the conclusion that the visions were very aligned. We really liked the team over at PayPal and gave us an opportunity to pursue the vision and reach our ambitions and targets even quicker together with PayPal and sort of working together with them across their 200 current markets.
What are those ambitions and targets?
Well, effectively, I mean, looking at what we've been doing over the last couple of years, it's, the reason why we started the company was that small businesses in general are completely underserved in every possible aspect of financial services. So the vision for iZettle has always been to provide small businesses with the tools to help them grow and compete with the giants out there. And in general, no matter whether it's, taking payments or whether it's taking e-commerce payments or having access to tools so they can sell online or work with inventory online and offline, etc. They are underserved in every capacity. So the vision for us is to get out there and help sort of all the small businesses out in the different markets to grow faster. And the reason is that, on average, 95-96% of all companies are small businesses. They account for somewhere in the area of 40% of the GDP in any given market. And historically, they've been nobody's really cared about them, neither politicians nor sort of financial service providers. And we think it's about time that someone takes the lead and sort of help them build the new sort of backbone to the economies around the world.
Yeah, how will you integrate your technologies with that of PayPal? Whose technologies will win out when you start to expand this offering to small to medium-sized enterprises?
Well, I guess the reason why PayPal saw this as a good opportunity is that we have built a fantastic sort of commerce platform for the small businesses out there, and it's apparently something that PayPal was missing out on in their own sort of offering. And given the fact that they currently have the 20 million merchants already on board across their 200 markets, I think the sort of the low-hanging fruit in terms of integration is just sort of cross-selling what we have been building over the years to their current sort of merchant base. But I think it's still too early to say. I mean, the deal has been signed, but it's still not closed. It's subject to FSA approval, and then we'll work together with the PayPal team to see how we best sort of move forward.
Who is a key competition now? Is it all about taking on Square?
Well, time will tell. But I mean, from our perspective, when we went into the IPO, the competitors out there, as we've seen them, is Square is amongst one of them. Probably the one of the stronger players in the world that we see as our competition. So they will definitely be part of the competition going forward.
But as you say, there are plenty of them. Is the competitive landscape hotting up? There seem to be more and more payment companies being born every year.
I think the payments landscape is extremely scattered and fragmented. I think what we've been doing over the last couple of years is to create one platform that sort of ties all the different types of services that small businesses need to grow their business in a sort of good and cohesive way. So I think there will be more payment companies, but I think there are very few sort of platforms offering the kind of solutions that we tend to do to this merchant segment in a good and comprehensible way.
Plenty of opportunity still, it seems, therefore. Jacob de Geer, iZettle CEO, joining us from Amsterdam, where he was attending the Money 2020 conference. Emily.
Thank you, Caroline. Coming up, more on Facebook's latest data controversy. We will get the view from Capitol Hill with Congressman Greg Walden of the House Energy and Commerce Committee. He joins us next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at TikTok, on Twitter. This is Bloomberg. This is Bloomberg Technology. I am Emily Chang in San Francisco. Back to our top story, the continuing revelations over Facebook's data sharing policies. This time, it's that Facebook was sharing user data with 4 Chinese electronics makers, including one company that's coming up in national security discussions, and that is Huawei. This has lawmakers on Capitol Hill demanding the social media giant come clean. Again, Senator Bill Nelson saying on the Senate floor that this is, quote, yet another example of questionable business practices by Facebook that could undermine basic consumer privacy, adding, it's hard to know what's true anymore. For more on this and reaction from Capitol Hill, Congressman Greg Walden joins us now. He represents Oregon's 2nd Congressional District and is the chair of the House Energy and Commerce Committee, which questioned Facebook CEO Mark Zuckerberg in April. Representative Walden, how concerning is this?
Well, it's concerning. Look, Silicon Valley it has an issue. It's about trust. It's about communication between Silicon Valley and Washington, D.C. and lawmakers, and about Silicon Valley and trusting communication with their customers. I mean, that's what this is all about. And that means you have to have clarity in the conversation. That means you have to have full disclosure in the conversation, whether that's at a witness table before Congress or in a agreement with your customers. And that's, I think, why users are frustrated and why members of Congress, as their representatives, are frustrated. And we got a lot more work to do here.
Do you think Mark Zuckerberg was truthful in his testimony? Was he misleading?
You know, I don't know about either of those things. I think he was truthful. I think there was obviously more that they found out along the way, more that they knew. Some they may have nuanced. I don't know. But, you know, in situations like this, you're much better to get it all out on the table early on, and especially when you're dealing with Congress. We're trying to figure out what happened, where did it happen, with whom did it happen, and what kind of exposure did users' data have, and to whom, and what control should they have over that? I mean, that really gets back to this trust and communication issue that's so important, whether it's with us in Congress or with consumers who are users.
Other lawmakers are incensed. Senator Mark Warner tweeting, "We need answers from Facebook, the whole story now, not 6 months from now." Senator Marco Rubio saying, "Why didn't Facebook just reveal this data sharing deal with Huawei months ago? Don't compare this to deals with other telecom companies. The South Korean government doesn't control or use Samsung the way China controls and uses Huawei." What is more concerning about the fact that these are Chinese telecom companies that are already under scrutiny by the U.S. government?
Right. And I think that is the heart of the matter here specifically. It's really twofold. One is the alleged past practices or current practices of some of these companies is troubling. That's why there are these discussions in national security settings. But beyond that, it is, why wouldn't you tell us? I mean, it's a pretty big question, but a pretty easy question. Why wouldn't you fully disclose? You should. They should have. And this gets back to why I think Silicon Valley would be well served by the CEOs, other than when they're in a crisis situation like Facebook is now, to come and share with us in Congress what their strategies are, what their agreements are, what their recommendations are. It's why I've invited them to do that before my committee. And so far, we don't have any takers voluntarily, but we'd benefit from their presence.
Are you going to demand that Mark Zuckerberg come back?
You know, first of all, we're going to follow up on our demand that he answer the questions that we've submitted. Now, for the record, there's some 3,000 questions that came from Congress to Facebook. So I realize they've got to sort through all that and give us honest and full disclosure and communication back. But clearly, with each one of these revelations, it starts a whole nother cycle of what did you know and when did you know it, and did you know it in time to have disclosed it but didn't. I mean, that's not good for Facebook, and Facebook's a great American company. It's a great innovator. It's like these other companies are. But they've gotten to a place where they're under intense scrutiny now, and they've got to get it right, and they've got to be fully transparent and improve their communications and their disclosures.
So a Facebook spokesperson has said the relationships didn't need to be disclosed because they were already public and announced by Huawei at least twice in 2011. Facebook mentioned Huawei as one of its partners in a 2012 blog post and has said other tech companies had similar arrangements. What's your response to that?
Sounds like it was written by a technical lawyer. And that's not, I don't know that we were going back and looking at every blog post ever posted. And this gets to the point about trust and communication, whether it's in a relationship in your family or with Congress. You got to realize and understand what's fair and what's fully disclosing. We're going to go back. We're looking at the questions that our members ask and the answers that we were given now in much greater scrutiny of the detail. Because if we're going to, lawyer this up, then things get pretty technical pretty quickly, and that's not good for Facebook or other companies. But if that's what we have to do, I guess that's the path we have to go down.
You've been pushing other Silicon Valley CEOs to testify, and I know you recently met with Twitter CEO Jack Dorsey. Are you concerned that other tech companies like Twitter, like Google, have similar relationships with the Chinese government or Chinese companies in a market that they have been trying to court for a very long time?
Well, let's face it, we don't know the answer fully to that, do we? Because clearly when we had Mr. Zuckerberg before the committee for 5 hours, this was not disclosed. They felt they had been disclosing apparently of it in the past. So we don't know. We should know. And this is again where these companies would benefit by coming before our committee voluntarily and sharing and answering questions. The American people have a right to know, and they have a right to know more than some legalese in a disclosure agreement that, frankly, nobody reads or understands, and beyond that, you can't edit it anyway. So they're just ignored. You hit click and agree, and off you go. And who knows what's behind it? And I think that's what really troubles consumers. They're not sure they can trust now some of these agreements and how their data are used or not, and with whom or not, and what's been scraped or not. And I think they're saying in this information age, something needs to change here. My preference is that the tech companies would realize this and come to terms with it on their own. And otherwise, they're going to end up in a regulatory scheme that may not be what's good for them or, frankly, the country, because frequently Congress tends to overreact, and we don't need to do that if we can get the answers and trust in those answers and improve that communication. So again, the invitation's wide open for the CEOs to come, and I hope they will, because different companies manage this differently. They ought to come and make their case before the representatives of the people, much like they do at conferences all over the world.
I do want to ask you about ZTE. If the Trump administration does do this deal to save ZTE, are the national security risks that the U.S. government has associated with this company, are they still valid? Is ZTE as much of a national security risk as it once was?
I've gotten more into this discussion with the administration as late as last night, because I was concerned and have been about ZTE and these other companies, for any foreign company, and their role in the U.S. and what they do and how they do it. Based on what I've learned, I'm a little more at ease that they would put in place requirements and audits and things that would make sure independently of what these devices do or don't do. If that's the case, it fixes it a bit. But I think we have to be on guard. We know the kind of cyber attacks our country faces from bad actors all over the world, whether it's China or North Korea or Iran or you name it. And we've got to be vigilant here. They're playing for keeps in these other countries. Often this is state-sponsored, and we have to understand the repercussions for national security, for intellectual property theft. I mean, it's just out of control. And so we have to be very, very careful. But I'll tell you what, I think this is a president who gets it and is putting America first in these debates. And so I'm willing to give him the benefit of the doubt right now as we dig into it.
So Senators Rubio and Warner have talked about super majorities that could override a Trump administration deal with ZTE. Do you think the House would also nullify it?
I think the first thing is people need to get educated on what that ZTE of the future would look like and what kind of controls and safeguards are there to prevent bad actors from doing bad things to the American public. So first of all, I think we have to start with that. I don't think most members have been briefed up on this yet. I'm not saying anything about the senators. Some of them are on the Intelligence Committee. I'm not. But I've had a number of briefings, and I think, if they get it right, then I think, President Trump should be given the benefit of the doubt here, because I believe he is standing up for the best interests of our country when he's going down these paths.
All right. Representative Greg Walden of Oregon, thank you so much for weighing in.
You're welcome.
Switching gears now to ride-hailing. Last month, European ride-sharing service Taxify joined the ranks of the unicorns, surpassing a $1 billion valuation. This after raising $175 million, led by Germany's Daimler. Bloomberg's Caroline Hyde caught up with Taxify's CEO Marcus Willig earlier and asked what they plan to do with that money.
We're investing heavily into the technology, which is now proving key in the ride-hailing space. That the barriers to entry are getting higher and higher, and without investing years of engineering effort, you won't be even able to compete. So just a few areas where we're investing is real-time pricing, estimating arrival times, more efficient dispatching, pooling multiple passengers in one car, etc.
Willig also went into Taxify's international expansion plans.
We're looking at a few other countries outside as well. We're already in early phases in Mexico and Australia, and we continue to invest in those markets as we see that actually there's still many, many more countries in the world where there's a monopoly in place. And I think it's now becoming clear for everybody that ride-hailing will at least be a duopoly, if not more. So we're currently looking at all of the markets globally where there's still room for us to expand to.
Still ahead, what do digital currencies and Uber have in common? We're going to talk to Galaxy Investment Partners founder Mike Novogratz next. This is Bloomberg. Galaxy Investment Partners Chair, CEO, and founder Michael Novogratz says that institutional investors are coming to the digital currency space eventually. Novogratz spoke to Bloomberg's Eric Schatzker at the Bloomberg Invest Summit on Tuesday and also noted that crypto regulators were caught flat-footed last year. Take a listen.
The regulators had to get involved, and so they are getting involved, and they're doing what they're supposed to be doing. The first thing is, wait a minute, let's calm things down, let's go after fraud, let's go after market manipulation. So the first two things regulators are going for are fraud and market manipulation, and it's a good thing. The Department of Justice talked about market manipulation with these indexes inflating their volume numbers. It's all true. And so we're going to knock out some of the crap from the system. I actually think it's healthy. There are bigger decisions to make. You know, Bitcoin they've already kind of said it's not a security, okay. But Ethereum, they haven't ruled on yet. I bet dimes to donuts. They will say Ethereum probably was a security, but it's not anymore. And they're stuck because they weren't ahead. There is this group of tokens that were issued, probably 2,500 in total, but in reality, probably 200 that matter, that are in this kind of regulatory no man's land. And they got to figure out how to deal with that. And they're working on that right now. My gut feeling is they're going to take out a law firm, they're going to take out a token, they're going to take out some of the promoters of these things, just to say, dudes, you got to play by the rules. But when we're talking to them about going forward in the future, they're very constructive at wanting to see this new innovative way of financing companies, of bringing liquidity and access to markets to the general population that they never had.
You've made pretty clear that you're and I've accused you of being a true believer, but you are. At the same time, you trade this stuff.
Yeah.
So how do you reconcile those two halves of your brain? On the one hand, the part of Mike Novogratz who says, I believe in this stuff, it's going to change the world to a degree, maybe not as much as the internet, but a lot. And then the other part of you that says, that's a screaming short.
You know, gravity is still gravity and market rules still work. And so when you see things that overnight go from an idea to $1.5 billion market cap, and you're like, these guys have only hired 3 people. Like, that doesn't make sense to me. You know, it's probably doesn't make sense. And so it's using the same rules and understanding of market psychology that I learned over 30 years and applying them to this new market.
The ballet of the charts? It's
the ballet of the charts. It's also just being, disciplined. Listen, sometimes you make mistakes. I owned a whole lot of Ethereum and it started rallying a lot. And I was like, this is kind of crazy. And I started selling some, maybe too early. But broadly, it has benefited me and our organization to keep taking chips off the table, to trade extensions and pullbacks, to really do work on which companies they're not really even companies, they're ecosystems. Which ecosystems do we believe have a shot of really growing and sucking people into them?
Mike Novogratz also made mention that, like ride-sharing giant Uber, there will be regulation. He just doesn't see it coming for another 2 to 3 years. Coming up, Alphabet's annual meeting was turned on its head when Google employees took to the stage to criticize their boss's pay. We'll have all the details on how shareholders voted down a proposal on diversity pay next. This is Bloomberg. Alphabet shareholders have voted down a proposal to tie executive pay to progress on workplace diversity. The proposal was presented at the company's annual shareholder meeting in Mountain View, California. Employees of Alphabet's Google teamed up with investors in a push to close the current gender pay gap. In a rare turn of events, Google employees have criticized the company for not doing enough to address workplace harassment and have backed a petition to create better policies and procedures. Here to discuss the surprising outcome of this meeting, Mike Trigg, CMO of the recruiting tech firm iZettle. Also with us, Bloomberg Technology's Mark Bergen, who covers all things Alphabet. So, Mark, talk to us about how this vote went down.
Yeah, I mean, this was a rare to have Google employees stand before the executive for the shareholder meeting. Typically, you have activist investors that stand up, and the sort of routine pattern is the investors will submit proposals, and they're often voted down. They're almost always voted down. And we have, because the company is very tightly controlled by the founders. The same thing this morning. The employees put forward the proposal about tying management and executive pay to diversity metrics. They also, as you mentioned, raised these concerns about harassment, but that proposal was voted down.
And the Department of Labor has an ongoing investigation into Google Pay, correct? What is the status of that?
Yeah, that's still pending. I mean, Google's kind of been hitting on all sides, right? There's a case that former female employees have brought about around gender pay. There's also the case that James Damore, the former engineer, brought about the opposite, that Google was sort of Google's discriminating against white men, and that following the very next question this morning after the employee spoke was a shareholder proposal about that Google's biased against conservatives.
Now, Mike,
yes.
Shareholders often vote down proposals at shareholder meetings, and yet you have other companies like Intel, Microsoft, Qualcomm, IBM that are doing much more to tie gender pay to executive performance, executive compensation. What do you make of this?
Well, first thing is that it's clearly a very topical issue, not just within tech companies, but across the board. This is something that I think it's great that the organizations you cited are being proactive about. And I think the vote with Google's board today shows how important it is at Google. This was an employee-driven initiative to really get this in front of the organization, and I think it's wonderful to see that.
But they voted it down. I mean, this is a company where the founders, Larry and Sergey, have a lot of voting power.
Sure.
We don't know for sure if they didn't have as much voting power, if this would have, in fact, been approved. Do you think the founder control at technology companies in particular is a problem?
Well, it's hard for me to comment about Google's structure specifically, but I think that, as Mark pointed out, Google's getting lawsuits on both sides of this issue. And so I'm sure their board's taking that into consideration and really trying to do the right thing for their organization.
Mark, what is Google saying about how they might address this otherwise?
Yeah, they said this morning they're certainly going to take this into consideration. They talked about even how their board itself is not that diverse, and they're going to work on certain metrics in the next few years to both diversify their workforce and the board. I think typically with these measures, Google likes to do things on their own terms rather than sort of dictated by what they see as activist shareholders or proposals even outside the company.
Interestingly, at Amazon a few weeks ago, there was a proposal that Amazon be required to interview a diverse slate of directors when choosing new board members. Amazon rejected it. Employees protested, and Amazon a few days later said, okay, we'll do it. Mike, what sort of data are you seeing about the gender pay gap in Silicon Valley specifically? I mean, I've seen data that it's 5 times the national average in Silicon Valley.
It's pronounced. It's clearly an issue here in Silicon Valley. And this is an area where iZettle has done analysis of our candidate database and looked at those gaps that are there, not just in terms of wage gaps, but just representation gaps. Women in tech roles are underrepresented. They only represent about 20% of the workforce in technology companies, and you see that diminish as the seniority within those tech roles increases. So at the senior exec level, it's only 10%. And so I think that's, those statistics back up why this is such an important topic for companies to address, not only at their executive level, but at every level in the organization.
And you do have other executives out there like Salesforce CEO Mark Benioff. They did a 2-year process to get their pay gap closed. Mark, talk to us about the other significant points at this shareholder meeting. A lot of issues came up.
Right. I mean, the biggest issue right now for the company actually didn't come up at the shareholder meeting at all. Last week they said they're not going to renew a contract, the cloud contract they have with the Pentagon after some pretty sizable employee protests. Google's putting out an ethical AI charter this week. They hope that will address that. I've never really seen so many employees, we've seen them out on Twitter, and at the shareholder meeting, very vocal about concerns. They're addressing, a lot of them are saying they don't want their technology used in military applications, and they're saying that they feel harassed. The shareholder meeting this morning, the engineer brought up the issue that this is really detracting from productivity. And they said that these issues are keeping us from being the best performing workers that we are.
Meantime, Mark, news story in the FT saying that the EU is poised to give Alphabet, Google a hefty fine as a result of its Android investigation. Tell us more.
Yeah, they're really being hit on all sides today. This is the second of 3 existing investigations that the EU has around Google for antitrust and its dominance. This one, we reported that Google is most concerned about this, even more so than the shopping case they were fined for last summer or the other ones on advertising. This is the crux of what Google makes them very successful on mobile, right? They're able to get the Android operating system out to 80% of the world's smartphones, and that has Google Search, that has Maps, that has all its services. The biggest concern here is less of, I think for investors, is less a fine, which Google could handle, and some sort of structural changes to how they operate Android.
All right, Mark Bergeron of Bloomberg Tech, who covers Alphabet for us, as well as Mike Trigg, CMO of iZettle. Thank you both.
Thank you.
That does it for this edition of Bloomberg Technology. From San Francisco, I'm Emily Chang. This is Bloomberg.